thing is, if it's too good to be true, it probably is. And there's no
Yeah.
such thing as get rich quick scheme in property.
Welcome back to Marketing Made Iconic. Today, I'm thrilled to introduce our guest, Derik Karamian. Derik is the founder of Australian Loan House, a highly successful brokerage known for helping Australians build real wealth through strategic property investments. Over the past decade, he's grown a powerful word-of-mouth business, managing a loan portfolio of over $200 million and earning recognition of one of Australia's fastest growing brokerages. Derik is the visionary behind Elite Broker Academy, innovative mentoring platform transforming how new brokers enter the industry, empowering them with the knowledge and support that he wished he had from the start. Today, Derik joins us to share his unique perspectives of lending innovation, the challenges facing younger investors, and how to navigate the noise to find genuine financial strategies. Derik, many professionals start their careers in traditional roles, but few step out boldly to create innovative businesses. You transitioned from being a bank employee to founding Australian Loan House because you identified significant gaps in the traditional banking and lending services. And you noticed how impersonal and transactional banking could be, and you envisioned providing a much higher level of personalised service to genuinely help clients achieve financial prosperity through property. So let's dive deeper into your compelling journey of innovation. What motivated you to leave banking and start your own brokerage?
Sure, Alicia. So first of all, thanks for having me join today. I'm really excited. Appreciate that opportunity. So there was a few things that motivated me to leave banking and create Australian Loan House. First and foremost, I love helping clients. That was what I enjoyed most about working at the bank, the opportunity to meet clients. And then you meet a wide variety of clients. You have everyday people, ultra high net worth people, business owners, first time buyers, and you have clients in all sectors of the community. I genuinely enjoyed and loved meeting people, having conversations, seeing what their goals and wants were and how I could help them with that. And I felt that working at a bank, you were restricted in doing that because there wasn't much flexibility in your approach. You had to toe the company line, so to speak, and you had to promote the services and the products being offered by the bank. And often you had to probably do what's in the best interest of the bank over what's in the best interest of the client. So I just felt very frustrated, and it got to a certain stage where I felt the time was right for me to go out on my own. I love having conversations with clients. I love meeting clients to this date now, even after 10 years starting Australian Loan House. It's my favorite part of the job, just meeting people, doing presentations, things like that. And I have a client-centric approach. I find that clients are at the heart of everything I do, and I just couldn't do that for an employee working in a bank. And along with that passion for helping clients, there was a passion to educate clients and helping them navigate the loan process and journey, helping them buy property, helping them build wealth, and then also helping their children or helping family and friends. So for me, that ability to help people work with clients, truly become a trusted advisor and partner in their property and lending journey, rather than just becoming a bank employee, just looking at a transaction and how I can meet a KPI for a bank. And then on a personal note, obviously, I've always had a passion and ambition for starting my own business, starting my own company, having that flexibility and having that ability to grow and meet people and grow both personally and professionally.
Yeah, I love that. It's such a fulfilling way to.
Yes.
How did you go about identifying the gaps in the traditional lending space that you aimed to fill?
So touching on what we spoke about earlier, I have a passion for helping. And then put myself in the client's shoes and I thought, what would I want from a trusted advisor? And I saw you want personalized service. I saw there was a lack of personalized service in the bank. People do your loan or help you with the transaction. 6 months later, they've left the job, moved to another division, etc. So there was that lack of personalized service and lack of ownership that throughout the life of your loan, you're going to deal with the one person. Then I saw that the processes could be slow and at times very inflexible. You were very restricted by the bank's processes, and it was almost a computer says no type system where if it didn't tick the boxes, you couldn't help. And then obviously the level of customer and client support. I
Yeah.
think clients are at the heart of everything we do. And to have a successful business in any industry, clients have to be the forefront of all your processes. And I saw that there was lack of financial education. People didn't know. People didn't know.
Yeah.
And that's also testament to the fact that now so many more loans are written through the broker channel than 10 years ago. People didn't understand the benefits of working with a broker, the benefits of looking for a second opinion, challenging the status quo on interest rates, etc. And then finally, I would say, if you, I felt that I could simplify the process from the time you speak to someone about getting a loan, time you buy the property or get that loan. I felt that there was a lot of scope and opportunity for simplifying and making it easier for the client and overall just improving the client experience.
Yeah. So, what's the philosophy behind Australian Loan House and how has that evolved over the years?
So you will notice that the client is at the forefront, and that's language I often use. So the
Love that.
main philosophy I would say is helping clients. So Australian Loan House's motto or catchphrase, so to speak, is helping everyday Australians prosper and grow by building wealth through property. So
Mm.
the common theme there is help. So we want to be in the business of helping people, and help can come in many forms, whether it's education, whether it's tailoring solutions to their individual needs. But at the forefront of our philosophy is helping clients, ensuring we have a client-centric approach, and allowing them to make the financial decisions that will truly help them build wealth. And then through that, we think it's about empowering clients with knowledge, educating them, and then also having a long-term relationship with them. It's not
Yeah.
I don't like to think of us as a transactional company that we just do your loan and move on to the next. I have been guilty of that in the past, and it's about establishing a long-term relationship and how can I meet your needs, not just now, but 5 years from now, 10 years from now. And I truly love it when I have older clients that I've helped years ago that reach out to me and say, "Oh, my son, my daughter wants to buy a property. Can you help?" So
Mm.
that validates our philosophy. And to be honest, I don't think it's involved. I don't think it's evolved. I
Yeah.
think for as long as I've been doing this and as long as I continue to do this to clients can be at the heart of everything we do, and helping clients gonna be is gonna be our main philosophy. Sure, technology changes, some of the processes change, but the philosophy is the same. It's quite simple, but when done right,
Yeah. I think the process can be quite overwhelming for some
yes,
people
yes,
sometimes. And from what I'm hearing from you, you
yes,
guys walk beside people to
yes.
help them have the confidence and security as they're going
Yes,
through
yes.
the process.
Empowering is very important.
Yeah.
There can be financial fear, especially for the younger generation and those first-time buyers, that they almost feel overwhelmed. And they make the biggest mistake of either not getting advice
Yeah.
or just seeing something online, something, and then yeah. So
Yeah.
empowering is also very important.
Yeah. I think that's important these days more so in this increasingly challenging and complex property market.
Yeah.
Borrowers can face significant hurdles
Yes,
from strict lending criteria to the necessity of substantial deposits.
yes, yes,
And I know you've creatively addressed some of these issues by developing your innovative lending strategies
yes, yes,
and helping your clients overcome barriers that would otherwise prevent them from entering the property market
yes, yes,
or expanding on their investments.
yes,
Let's explore this for a minute. Can you describe your innovative approach that allows clients to borrow up to 100% of the property's value?
Sure. So we're seeing more of that because of rising property prices. People are struggling to get into the market. Now, I have to say, it's not for everyone getting a 100% loan because you ideally do not want to be leveraged that much and you want to have some equity in the event something goes wrong. But in some cases, it can be very beneficial. And obviously, this is subject to everyone's specific needs. So it's not a one size fits all approach. So there's a few instances where we've been able to tailor solutions that have allowed people to borrow up to 100% of the loan. So the first one is there's been an introduction of a few lenders that allow buyers, and not just first home buyers. Now, because I want to touch on that because a lot of the incentives are around first home buyers. But
Yeah.
there's a lot of people I come across and I see among that client base that they were married, got divorced, sold property. They're technically not a first home buyer, but they don't own property and they don't have a large deposit, but they make a good income. And they often fall behind because all the government incentives and all the schemes and all these things that can allow you to borrow more are tailored towards the first home buyers. So there are lenders now that will do loans up to 100% the value of the property for people with a certain income. And that allows, and they pay a small, they call it a low deposit premium. And that low deposit premium ends up being significantly less than if they had to pay a 5% deposit and mortgage insurance with a normal lender. And that allows them to buy property. And that applies to both owner occupied and investment loans. And it goes up to a maximum, I believe, of around 2 or 2.5 million. So there's no restrictions, whereas some of the other incentives, there's a lot of restrictions around. And we are finding that's becoming a lot more popular. And then what's happening is with these lenders, the interest rates generally tend to be around 0.5% higher than your traditional lenders. Hence why there's some income requirements. And what we're finding is that people use these loans to buy the property. And then in a few years, once the property value goes up and the loan to value ratio is back down to 80% or below, then we refinance to another traditional lender and their rate goes down. So if you're
Yeah.
looking at the bigger scheme of things, that couple of years of paying extra interest is negligible compared to the wealth they've generated through the appreciation of property. And we're finding that's becoming a lot popular and a lot of clients are not aware of these options. So that's one. And then the other two specific, say, scenarios or solutions that you can offer for people seeking 100% loans is the first one is getting a guarantor loan. So I've got a client recently, he had an investment property, is looking to sell the investment property, but he feels like he won't get enough from the sale of the property. So he's
Yeah.
going to use his parents' property as guarantor and leverage off the existing property in the parents' property. And once that existing investment property is sold, then he can buy something a lot bigger because he's just had his child and they need a big place.
Great.
So there's instances like that. And then there's also, to a lesser extent, cross collateralization, meaning you have a property now, there's significant equity in that property. You've spent all your savings and money trying to physically pay down the loan, but you don't actually have cash savings that you can use towards a deposit. So what you can do is you can leverage off the equity of your existing property and use it to get a 100% loan for the new property. Now, there are some negatives associated with that, and I always recommend this option as a last case scenario, but in some cases, it can be beneficial, and obviously it depends on everyone's personal financial situation. But these are just a few instances that we see of people being able to borrow up to 100% of the value of property.
Great. And how do you approach complex lending scenarios like clients with significant tax debt or unusual financial
Yeah.
situations?
I suppose that's where my legal and finance background comes into play. I was a lawyer in a previous life before starting my career in banking. And one of the positives having a legal and finance background is that it allows you to analyze things differently and be
Yeah.
more creative in your approach and thinking outside the box to find solutions. And I try to tailor that to my approach when dealing with complex scenarios. And this is what I find separates Australian loan house from some of our competitors. We do a lot of complex and unusual type lending structures. And it's about, even though it's very complex, ultimately it's the goals and the needs of the client and having a quality conversation with the client, finding out what they're looking for. Because they might say they want something, but once you challenge them and deep down and deep dive into the conversation more, you'll find out their actual goals and wants different to what they're saying. And then once we have that more detailed conversation, we can identify solutions that may have not been as obvious initially when they first approached us. And then in these type of scenarios, it's very important dealing with a broker because your traditional banks may probably not be able to help you with these type of scenarios and structures. Or having
Yeah.
access to different lenders, different products, and not being tied down by one bank for product really allows us to meet all clients' needs. And then at Australian Loan House, we have access to private lenders and private funders as well. And sometimes we use their service to meet the needs of clients that just don't fit in that normal lending box.
Yeah. I guess this is a good time to delve into. I'm really curious about younger Australians, the younger generation coming up.
Yeah.
The aspiration of owning property has
Yeah.
really been a cornerstone of Australian financial security.
Yes.
But for many young Australians today, the dream feels increasingly distant. You've
Yes. Yeah.
got challenges like rising property prices, tightening lending restrictions, economic uncertainties.
Yes.
So, how have you made it? And I know you've made it a personal mission to help younger generations and guide them into property investments as
Yeah.
well. What are the biggest hurdles younger Australians face today when entering the property market?
So I see a lot of challenges. Unfortunately, it is a very difficult time, and I do get concerned that when my children are older, how are they going to buy property in
Yeah.
15, 20 years' time? That is a very good question. There's a lot of challenges. First and foremost, the most obvious is the high property price.
Mm,
Now, there's nothing we can do about that. We could have another podcast to talk about why prices are so high, but unfortunately, for most people, it's just too expensive. And you have a lot of younger people that are just priced out of the market. So that's the main one. There's not much we can do about that. And then obviously with that higher property prices, it means you need a bigger deposit. And
yeah.
saving for a significant deposit is very difficult given wage growth is not keeping up with the cost of living increases. And you're
Yeah.
having a disconnect between how much price of everything is going up versus how much you're making and how much tax you're paying. So that's becoming a real challenge. So you can't save as much. And then the time it
Mm,
takes you to save the required deposit, prices have already gone. Then you're looking at, I touched on this earlier, the fear of financial risk. People just feel overwhelmed. There's so much noise out there and they don't know what to do, who they should speak to. They're scared. Can I afford loans? Should I do this? Should I wait till I save? I hear so many times that, listen, we want to wait, save a bit more. And what
yeah.
happens is that 6 months they save, the prices have gone up and like you're chasing your tail, you're never going to catch it. And then lack of financial education. Yeah. I think with social media, yes, there is a lot of access to information, but at the same time, that information isn't necessarily always correct. And you're seeing all these videos of influencers and people saying you can make all this money and build all this wealth through these simple property investments. And it's just not the case. And I'm finding that also clients, younger people, don't have a longer term approach. They want to try to get into their ideal property straight away. And I find that that becomes a burden because they just can't afford it. Most people want to live in Sydney. Let's say we're talking about clients in Sydney. They want to
Yeah.
live in metropolitan Sydney. And for certain people, that's just not realistic, unfortunately.
Yeah. How can what advice would you give the younger generations to prepare to buy property in the current environment?
Listen, I think there's a few things we can do. First of all, it's the education. speak to a mortgage broker, speak to an advisor, speak to an expert that knows and has been doing this for several years and can guide you. Be aware of all the schemes and policies the government has that can help younger Australians, especially first-time buyers. There's a lot of things that you can waive your mortgage insurance. You don't have to pay stamp duty if it's an off plan or a newly established property. The government offers the first-time buyer rebate. So there's a lot of schemes. Be across those schemes and see how they can help you. If possible, if you've got family, your parents that can help, use their
Yeah.
property as a guarantor. And
Yeah.
then there's also certain professions that you don't have to pay mortgage insurance. So that goes back to your education piece, being speaking to the right people and knowing exactly what you can do. And then some obviously try to save as much, reduce your liabilities, namely credit card debts and personal loans, car loan. I see a lot of young people that have a car loan, personal loan, credit card that just they don't and
Okay.
even buy now, pay later facilities like Zip
Oh,
Pay, Afterpay,
Afterpay.
that
Yeah.
stuff they don't realize, and then half the time they don't even know. And we'll do an application and we'll do a credit search and we'll say, oh, you've got XYZ. Oh, I forgot all about that. So
Mm,
they don't know, and knowing their numbers. So many times I'll ask a client, what's your salary? Oh, it's about this much a week. Or is that after tax, before tax? Do you pay super on that, or is that outside of super? So knowing your numbers, being educated, having discipline around your savings, along with the other things we spoke about. And then another thing that I don't think gets spoken about enough with younger buyers is their HEX debt and how that can impact their serviceability. Now,
yes.
I understand the Labor government talking about scrapping current HEX debt by 20% for most younger Australians. And there's also talk of updating APRA's lending guidelines to remove HEX debt from serviceability requirements.
Yeah.
But a lot of young Australians gone to uni, gone to TAFE, have a HEX debt. They don't know how much it is. They don't realize. And for the most part, some people only have a small HEX debt, and you could pay that off, and that could make a significantly big difference to how much you can borrow.
Wow.
So these things make a big difference. And then the final thing is rent vesting. Rent vesting is a concept where you rent in the area you want to live in, but you buy in the areas that are more strategic. So
Yeah.
looking at interstate opportunities, regional opportunities, looking outside the major cities. Because for the most part, most young Australians unfortunately couldn't buy what they would want to buy in Sydney and the major cities. It's a sad reality of fact. And what investing allows you to do is enjoy the lifestyle of renting and living in that area while still getting access to the right properties in the right markets. And in some areas, those markets perform better than the Sydney market, etc., and you get better rent. Look at areas in Brisbane, Perth that over the years have gone up so much in value. And back 10 years ago, prices in Brisbane were probably like $400,000,
Yeah.
and now they're over 1 million.
Yeah. Wow.
So there's all these things that young people can do to help them get their foot in the door.
Yeah. That's awesome. And you mentioned it before about all the information out there
Yeah.
or misinformation,
Yes.
especially on social media these days. And it does make it increasingly challenging for people to discern what's credible financial
Yes.
advice and what's not. Derek, I know you've seen firsthand how these kinds of trends affect your clients and leading to some risky decisions.
Yeah.
And as you've already explained, your approach involves extensive client education and a strong emphasis on ethics and transparency, which is really awesome. And additionally, through Elite Broker Academy, which I haven't really
Yeah.
talked about yet, you are also committed to nurturing the new generation of
Yes.
brokers to prioritize integrity and client well-being. So
Yes.
let's discuss how people can navigate this noisy environment, how they find trustworthy and beneficial financial guidance.
Yes. Yeah. Yeah.
How do
So,
you think people can differentiate between credible financial advice and misleading or harmful
yeah,
advice?
I think that's a great question. Unfortunately, we're seeing a lot. noise, social media space, especially a lot of TikTok videos, Instagram, etc., that promising all these things. Now,
Yeah.
the first thing is, if it's too good to be true, it probably is. And there's no
Yeah.
such thing as get rich quick scheme in property. It's a property is a long-term strategy. I always like to, even when I'm buying goods and services online, or from people I've never met or dealt with before, check for their qualifications, check their experience, do a LinkedIn search, do a Google search, look at them on Facebook, do all these other profiles and platforms, marry up with the image that he or she is portraying when they're communicating with you. And if it is a scam or if it is misleading, often the answer is no. Then also look for the disclosures and the transparency. Do they highlight all the costs involved? Do they highlight all the negative connotations from doing this? Doing the due
Mm,
diligence around that. I always like to look at Google reviews. Has this company or has this person got any Google reviews? If
yeah.
not, okay, that's something to question, maybe deep into it, maybe speak to, try to find out if someone else has dealt with this person and what their experience was. And then also being aware of emotional manipulation. There's often a lot of
Yeah.
incentives that you need to sign up now or you need to act fast. And I always find that groups that are putting pressure on people to sign up sooner rather than later and putting pressure fast, there's a catch. So I think,
Yeah.
and then speak to a few people, get a second opinion. If something doesn't sound right, just run it past someone else. Hey, what do you think? Does that sound right? Because if you have doubts at the back of your mind, chances are it's not a legit thing.
Yeah. What's your actual process for educating your clients?
Yeah. So I do a lot of, I try to focus on a lot of education pieces. Now, the challenge is finding the time in your business to educate and work on your business. There's a few things I do, namely run webinars and seminars. For example, tonight I'm hosting an event on buying property through a self-managed super fund and the benefits
Great.
involved in that, the positives, the negatives, the costs, etc. So I try to do seminars and webinars. If you look at my social media activity, always educational pieces. My posts on LinkedIn, Facebook, they might not be sexy, but it's all educational around what I believe clients should know. I have ongoing communication with my clients around how the property market is going, the lending changes that are happening, newsletters advising of changes. And then every time we come across a significant lending policy shift change, we communicate that to our clients and referral.
Nice.
So we have a few touch points to try to continuously educate clients and referral.
Yeah. And I love that you're making a difference in terms of raising the bar really for new people coming into the industry
Yes.
and new players and brokers and things through Elite Broker Academy. How is that crucial to ensuring integrity within the lending industry?
I believe it's very important and quite crucial. We're at a stage at the moment where I believe the number is 74 or 76% of loans written in Australia are written through the broker channel. But
Mhm.
that's a great testament to the confidence Australians have put in the broker space. Now, 10 years ago when we started, I think that number was close to 40 or 50%. So we've had a significant shift. And in that
Yeah.
time, we've had rates that went down to 2% during COVID, and then rates went up to 6%. Then we had, obviously, during that period, we also had the Royal Commission, and the banks were trying to make the Royal Commission more about broker remuneration and brokers rather than banking misconduct. So there's been a lot, I wouldn't say turmoil, but a lot of activity in these 10 years. And to come out after all that and be writing 76% of loans in the country, it's a testament to how well brokers are doing and how much trust brokers have. Now, all these years we've worked on building up the trust. It can all go away very quickly if people start
Mm.
doing the wrong thing. There can be a misconception amongst younger brokers that broking is easy money and easy work, and They just do a few quick loans here and there. They can make a little bit of money. And not only is that true, but it's also dangerous because then you're approaching a conversation and a scenario with a client with a totally different and wrong mindset. So with that,
Yeah.
we know with what we're doing as brokers, it comes that responsibility. And with all these changes in lending, the introduction of AI, stricter regulation, stricter compliance, there's all these things that brokers have to be aware of. And it's not just as simple as just doing a few loans. We are seeing that the younger brokers are not always doing the right thing by the clients, and educating them is crucial to ensuring, first and foremost, great outcomes for the client, maintaining integrity in our industry, and also ensuring the best outcome for the client. So part of the reason I started the Lead Broker Academy was for that reason. I wanted to educate the younger brokers, especially the new to industry brokers,
Mm.
empower them and help them to make better client outcomes. And by doing this, we're preventing misleading and deceptive conduct. We're improving the client process. We're promoting the right types of behaviors, and we're strengthening the broker and client relationship. Ideally, we want to get to a space where almost 100% of the loans written in the country are through the broker channel.
Yeah. And I understand as well that there is an actual requirement for mentoring for new brokers in the industry.
Yes. They all have, for new to industry brokers, they all need to be mentored for 2 years by an accredited mentor.
Yeah, perfect. And finally, Derik, what keeps you up at night?
That's a good one. My 3-year-old kept me up last night, but that's probably not the answer you wanted. I think it's helping younger buyers. I think I think about it for my children, and then I
Yeah.
think, and my children, my oldest is 7, my youngest is 3, so they're that age. But I think
Mm.
if it's difficult for young buyers now, what's going to be like in 15, 20 years time when my children are ready? And there's a lot of people that don't have the benefit of the bank of mum and dad. And there's a
No.
lot of people, especially in the migrant communities, migrate to Australia wanting a better life, and they don't have the same opportunities and they don't have the same financial backing as some other younger people. So for me, I suppose what keeps me at night is, how can I help more of these people? How can I
Yeah.
educate? How can I truly help them build wealth through property? And at the same time, still focus on my existing clients and still growing the business and meeting the day-to-day needs of running a few companies. That's, yeah, that would be what stresses me out the most.
Yeah. Yeah, but it's a great vision, I think, because you're thinking about our future
Yeah,
generations and the way that they can actually go about living life. I know my son is 17, and
yeah,
so it is in that decision-making
yes,
process
yes,
of life of transitioning between or going from school and being looked
yeah,
after to what does it look like to be an adult and
yes,
make a living for myself and own property or
yeah,
what career and all those kinds of decisions. And it is a bit scary for them.
I
I love
agree.
that keeps you up at night.
Yeah,
Thanks so much for joining us today, Derik,
you're
and
welcome,
sharing
Alicia.
your valuable insights. For listeners that are inspired by your stories and strategies, where's the
Yes.
best place for them to find you online and learn more about Australian Loan House and Elite Broker
Sure.
Academy?
You can find us on our websites, obviously australianloanhouse.com.au or elitebrokeracademy.com.au. We're available on Facebook, LinkedIn, and Instagram. And you can even Google Australian Loan House. You'll see our website, all the Google reviews we have, some of the awards we've gotten. So everywhere and anywhere they can find us.
Fantastic. And for our listeners, if you found today's conversation insightful, please share this episode with someone in your network that could benefit from what Derik has shared today. And let's help more Australians unlock property wealth and financial clarity. Until next time, thank you for listening.